Hey guys, Simo here, your host at Investment Research. So listen, it's November 9th, 2025. Markets are shut for the weekend, and I have some good notes. So why not jump on real quick and walk you through SoFi Technologies before Monday hits, because next week could get interesting and I don't want you caught flat-footed. So Friday the stock finished at $28.21, up 3.9%, traded 78.7 million shares, and yeah, it dipped down to 25.66 early, but buyers stepped in hard. Still 13% off that October 29th all-time high of 32.57, but honestly, the way it defended support this week, that tells me something. Now look, the whole market's been kind of a grind, right? Nasdaq dropped 3% this week, AI stocks got smacked, yields sliding, and then you've got this government shutdown, day 36 now, furloughing 800,000 workers, no jobs report, consumer confidence down 6.2% month over month. So for SoFi, that just poured a little extra gas on the pullback fire, slowed down regulatory approvals, made funding rounds trickier, and honestly spooked some institutions into trimming. But here's the thing, between us, shutdowns don't usually kill the market long term. Half the time, stocks actually end higher during them. So once this nonsense clears, and it will, the rebound could hit fast, especially for a name like SoFi that's already moving hard into fee-based capital-light revenue. That's the part institutions love. So what actually sent us to the moon in October? Third quarter earnings, no question. Let me run it down quick. Adjusted revenue, 950 million, up 36% year over year. Beat the street by 6%, 139 million. Adjusted EPS, 11 cents, they were calling for 8, so 37.5% beat. And then, boom, 905,000 new members, total now 12.6 million, up 35%. Products jumped to 18.6 million, 36% growth. Cross-sell hit 40%, highest in years. 409 million, up 50%, now 43% of the total mix. Operating margin 15.4%, up from 9.2% last year. Loan volume quadrupled quarter over quarter. Home loans up 93%. And then they raised full year 2025 guidance to 3.54 billion revenue, 36% growth, EPS 37 cents, 19% higher than before. That, my friends, is execution. That's why growth money kept flowing in even with the market noise. The pullback, just profit taking, plain and simple. Big funds locked in gains after a 171% 12-month run. Volume stayed 60 to 70 million on the way down. No panic, no retail dumping, just orderly trimming. Year to date still over 100%. So in my view, this is just a healthy reset after a 16% rip in 8 days. Nothing broken here. Institutional side, convictions quietly building. 38.4% owned. 579 funds added 2.65 billion net last year. Vanguard, BlackRock leading the charge. Zacks rank 2 buy on earnings momentum. Goldman's holding at 27, Needham buy 36, Mizuho buy 38, Consensus hold averaging 26. Rule of 40 score at 67, that's elite, blending revenue growth and profitability. Trades 10.5 times forward sales on 36% growth, now profitable, fair multiple for where they're going. Quick backstory if you're new. Started 2011 doing student loan refi for millennials drowning in debt. Went public via SPAC June 2021 at 8.65 billion, up 500% from 2022's $4.24 low, under 20% off adjusted IPO price. First profitable quarter, 2024. Chamath's golden child in a sea of SPAC disasters. And here's something I've got circled in red this week. Chime, direct neobank competitor, just raised their 2025 revenue guidance on November 5th, now calling for 572 to 582 million this quarter, above the street's 569.6. So if that prints strong sector sentiment lifts, could give SoFi a 5 to 8% sympathy pop, especially since their own IPO platform is active and they're positioned to ride any neobank wave. Double tailwind, technicals looking clean. RSI 55 neutral, not overbought. MACD just flipped bullish on the daily. Support 27.14 to 28.14. Volume backed, holding firm. Resistance 29, 20-day moving average. Break that and 30's in play by Wednesday. Stop below 26.50. My model for next week. Monday opens around 27.10 after the jobs print. Tuesday 27.65. Wednesday 29.39. 65% chance we stay above 28. Friday target 30. That's 6.3% upside from Friday's close. 90% confidence range 27.50 to 30.50. 30% risk we test 26 if payrolls come in soft. Position call. If you bought below 20, hold the call, trim 10% at 30 to rotate into something with yield. New money, add 27 to 28, target 36 to 38, stop 26.50. Dividend focused, pair it with 3 to 4% yielders. Let SoFi be your growth engine. Also on my watch list, Monday payrolls sets the tone for risk appetite. Chime follow through midweek, sector flow trigger, volume over 80 million when we hit 29. That's your breakout confirmation. That's your full SoFi update for November 9th, 2025. Tuned for Growth Stocks 2025, buy or sell SoFi, fintech investments, and stock portfolio strategies. Like if you're adding on this dip, subscribe for these weekend calls, drop your target in the comments. Talk to you Monday, stay sharp.